you and I and most people look at the economy for, what it is currently, and that is it's pretty horrible. I mean, look at the economic information, look at the data. Sentiment's pretty bad, and I think it reflects the information that we're all seeing. We have a health crisis, we have an economic crisis, but the stock market as a forward-looking asset class sees the economy for what it could be and what it will be. And what the stock market is seeing is improvement on the health front, improvement in the battle against COVID-19 with regards to the science, improvement with regards to, jobless claims coming down over the last 5 weeks, which is a leading indicator, and a slow reopening of the economy in the month of May. So I think that's what the economy is looking at. Of course, all of the policy support from the Fed and from Congress has certainly helped. And as a result, good companies in the Nasdaq, as you mentioned, technology companies with secular growth, high quality companies have held up fairly well and look pretty good given the backdrop that you mentioned. Or despite
we had a
the
guest on
backdrop,
earlier
I
in the
should
program. It is. But I think, we have to look at this globally. And I'm like many of the skeptics, and I thought, well, this is just bizarre why the market keeps running. But then, of course, you think about the world and you realize trillions of dollars in investment money around the world, maybe looking at the U.S. and saying, well, if I've got to put my money somewhere, the American economy has the resiliency and, more importantly, the infrastructure, medical or otherwise, to rebound faster, particularly than many emerging economies do.
Yeah, absolutely. And I think that, regardless of the crisis, I mean, the American economy is still the most dynamic economy in the world and has an opportunity set of companies, Amazon, Microsoft, Apple, some of the best in breed retailers that if you're an investor, whether you're global or domestic, and you're looking to put capital to work, do you want to buy a 10-year treasury at 70 basis points? Do you want to sit in cash, or do you want to own some of these companies that, okay, things may have slowed for some of them during this recession. For others, they haven't. Amazon's business is actually doing better. Microsoft is actually doing better and has seen a pickup. But despite that, if you're looking out 6, 12 months, even 24 months down the road, and you believe that this is temporary, do you still want to own these companies that will likely get stronger through this and have good returns on capital for the next 5 years? And I think the answer is yes, and investors are looking at that. As opposed to what do the next 3 months hold for the economy?
I hear you, Jason. We're running out of time. But does it worry you at all that it seems like so many people are talking about the same stocks? Microsoft, Amazon, Google. I mean, Goldman Sachs put out a note saying it's getting a little risky out there as everything gets concentrated into the same names we've been talking about for 10 years.
Yeah. And it's an interesting point you make, because then you have to wonder what value does an investor place on these companies that outperformed in 10 years of a bull market on the way up and outperformed in the last, couple of months in what was a fast and sharp bear market on the way down? I mean, you want to talk about quality. Everyone was screaming that these stocks were overvalued and they had run too fast, too far for too long, and they were overpriced. And yet, even in the downturn, they have performed on a relative basis really well. So I think on the upswing back up, not only are they good businesses, but the stocks have proven to investors that they can be owned through good and bad environments. And you got to wonder what value is placed on that. So we still like them, the businesses and the stocks, longer term.